Today it's going to be a great guest. His name is John Rusin. Oh my gosh. John is one of the best person I've come to know actually. John is a real estate investor and he's actually the vice president of Vinny Chopra. Prior to getting into real estate, John was a regional marketing manager for a large car manufacturer brand.
So over the past year and a half now, we've really done a lot from helping people grow their businesses, growing by increasing our investor base, doing a lot of things, the ins and outs. And then me personally, you can never have enough assets and cash flow. And, I don't want to work forever. I want to have, the freedom. So it's not about being rich. It's about not about having a lot of money. It's about the freedom that the money brings.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio.
All right. Good morning, America. How are you? Good morning, the world. Hey, it's so exciting to have you guys. I know Vinny's a little bit more dressed up today, but hey, it's going to be an exciting day. I'm recording literally so many different videos today. Got my shirts, my ties, all the clothes so that, I'll be changing in between. Thank you for joining us every Friday at 9:30 a.m. at the Vinny and Beau show. It's going to be an exciting show. Good morning, Beau. How are you, brother?
I'm great. I'm another Friday in the books. I wasn't much of a runner, but now I started running at the gym because I'm like a little short guy with a lot of muscle, so it's hard to run. But I said I'm going to start running so I can really just start shredding down. So I go into the little aerobic room, so I'm away from people, and I'll just run. And in between, I'll do 2-minute rounds of running. Then I'll do a set of burpees.
Oh yeah,
and it's actually really paying off right now. So I feel extremely good. We're able to go to the gym still here in Nevada, which is good because
that is so wonderful, and having the best, health is the number one. I mean, health is wealth. We have always heard that. But, at the age of 68, now I really realize that it's well worth it to have the best foods that you eat, nourish your body and take care of the body, soul, mind, everything. And I'm really excited about our guest today. By the way, people joining us, please go ahead and put where you are from, your name, where you're from on the chat, comments and things like that. Please subscribe to us and look forward to seeing us every Friday at 9:30 Pacific, 12:30 Eastern. Thank you again. And today it's going to be a great guest. His name is John Rusin. Oh my gosh. John is one of the best person I've come to know actually in a few years, and he's come in my life. I'm going to kind of introduce you. Is that okay, Beau, if I can introduce my buddy?
Please.
Yeah. John is a real estate investor, and he's actually the vice president of Vinny Chopra. Hey, who is Vinny Chopra here? I don't know. His multifamily academy, currently living in Knoxville, Tennessee. John was a college athlete who has a bachelor's in biology, but quickly realized the power of owning assets over liabilities. Oh my gosh, that's what we talk about. How to really own assets, not put lots and lots of liabilities like this home. But it's fun to have it, right? Hey, but over liabilities and dove headfirst into the real estate investing world. And prior to getting into real estate, John was a regional marketing manager for a large car manufacturer brand. John's mission in life is to help others realize the power of collecting cash flowing assets. And he's doing it. He's walking the talk. As a matter of fact, we'll see in the interview, and a lot of you will really relate to him. Assets to allow them to live a financially free life. That's what we are really trying to do, isn't it? To live healthy, wealthy, and be wise, and to a free life and escape the rat race, the W-2, the rat race, and all that. Welcome, John. How are you, brother?
I'm doing well. It's such an honor to be here with both of you legends, and I'm honored to come and bring hopefully some good value to the audience, and we can talk about many topics and where I got started, and all thanks to you, Vinny, and then thanks to Beau for the great loan. So I'm excited to be here.
Oh my gosh, I just can't tell you and express my gratitude. I put that post, really, I meant it, a couple of weeks back, and that's the most likes I've ever had. I mean, you are just great, handsome man, eligible bachelor. I mean, you name it, man.
Love it.
Tell us a little bit, let's start from the beginning. I mean, you are such a crusher. You're a thinker, a planner, a doer, man. Nothing stops you. I mean, I just can say so many great things about you, but you tell me, let's get started, right, Beau, buddy?
Exactly. Let's dive in. Why don't you give a little bit more about your background, and then how you came to find Vinny, and kind of like how this all started, and then your forward growth from joining the academy and learning about multifamily, and now what you do within the academy. I think people might not see you enough here, so let's kind of dive into that, and then we can go from there and talk about the recent deal.
Yeah, absolutely. So I went to college originally. I wanted to live the dream, go to school, get a good job, in my case, being a doctor. And the more I went through undergrad, the more doctors I was exposed to. I worked in an ER as a scribe in undergrad, and had a lot of great mentors that were physicians, very well off and doing very successful physicians. And the more I learned and the more I spent time with them, it was more of a job. They really enjoyed what they did, but they were trading so much time for money. And it wasn't the golden physician lifestyle that one would imagine. Working ungodly hours, getting paid well. I think the average salary for a physician is right around $2.25 in the USA. But with different healthcare switches, there are a lot of things doctors are getting out. The quality of life for a doctor is definitely decreasing. So I was like, there's got to be a better way. So I always had known I wanted to get into real estate. I just didn't know how. So instead of going to medical school, I got a sales job working at a corporate Verizon store. So it was a great job. You learn to deal with people really, really quickly. So I did that for about a year and a half. And I actually dealt with a owner of a large company. And he was like, John, I loved how you handled the situation. Would you want a position with me working? And so that's how I got this amazing marketing job and traveled the country, was in charge of a team, millions of dollars of vehicles, shows. It was awesome. I did that for about a year and a half. And that being in a management role, it really teaches you how to understand people, deal with people, because you deal with so many different personalities. And being on the road, away from home, it was very, very, lots of challenges. So you learn to overcome them. And then I was blessed enough. So the power of networking, my older brother works for another large syndicator, multifamily real estate investors. And then Dylan Marma, who actually worked for Vinny, they're all great friends. Josh, my brother, and Dylan, they lived in San Diego, worked for another company out there. And, Vinny reached out and said, hey, do you know someone that could, come and join my team, work for me? And Josh and Dylan made the recommendation, and the rest was history. So came on with Vinny, and it was once in a lifetime opportunity. So how could you say no to, work for such an incredible person like Vinny? And, he's been a blessing in my life. And so over the past year and a half now, we've really done a lot from helping people grow their businesses, growing by increasing our investor base, doing a lot of things, the ins and outs. And then me personally, you can never have enough assets and cash flow. And, I don't want to work forever. I want to have, the freedom. So it's not about being rich. It's about not about having a lot of money. It's about the freedom that the money brings. So, if I want to be able to take a week off and spend it with my kids or go to games, I won't have to be tied up to a job. So, that's my true motivation to, not be stuck and essentially escape the rat race. And Vinny has allowed me to learn the skills to do that. I can't, lifelong skills that I'll be able to use forever. So I'm very, very blessed.
Oh, well, I definitely want to say thank you, John. I think what you have accomplished in a year and a half, it's been tremendous. I mean, I tell my wife, my daughter, Monica, our whole team knows, and the partnerships and the exciting thing that you have brought in my life with the senior living, with your friend you have known for 9 years, Shahid Imran. It's just amazing, what we'll be doing for the next decade and beyond. So let's just talk about, I mean, you are so driven. You're driven, so driven. I mean, you're just like, I mean, nothing stops you. So tell us more about that mindset, that attitude. How did you develop it, and what did you have to do? Because a lot of people watching us, they want to be doing much better and do better and make more money, savings and cash flows and all that, right? So what drives you, buddy?
So one thing that I really learned in college and being a collegiate athlete, so I did college track, and 4 years, every year round, we had 5 and 6 a.m. practice. And so it really trained myself. So there were mornings that we'd go out and maybe have drinks or stay up too late studying. And every morning I had to get up at 4:30, 5 a.m. to go to practice. And so after about a year and a half of doing it, I realized that you either do it or you don't. You can have that mind shift and say, look, I'm going to take advantage and make the most of this, or I'm going to be miserable. There were some days we'd have to ride our bike. Kind of a funny story. I lived in the townhomes across from campus, and our buddies, we'd all ride our bikes to practice in the morning. And some days we'd be like, oh, we just hope we get hit by a car so we can go home and not have to go, because it was 5 a.m. and some of us were hungover. I won't plead the fifth on that, and very, very tired, and we have a long day ahead, and we're like, oh, if we can just go back to bed. And but it was a mind shift that happened that said, look, I'm either going to do this or I'm not. So I chose that I'm going to make the most of it, get up, and it was a great feeling. So I would have practice, I'd work out, have breakfast, study, and it all before 8 a.m. And most people on campus weren't even up, by then. So it was a very accomplished feeling. And so that's where my mind shift really set that, you do it or you don't. It's as simple as that. There's no secret.
Oh my gosh. I mean, John, you just hit the nail on the head. Massive action. I mean, a lot of us are doers, a lot of us are watchers, and a lot more are watchers, by the way. I mean, they just don't take risks, and they just sit on the sideline and they just say something better is going to happen in my life. But what you are talking about is what's the real success of the 1% in America who are making top money, or 3% or 5%, and also the 97%, right? The key thing is, for us to really make sure that we get obsessed with the passion of accomplishing every day. That's so very important. Thank you everybody who's joined. Give us some likes, some hearts, guys. I know I see some hearts from the, girls over there, I think, and some likes. So go ahead and give. Remember, you want to put the notification on so that you can watch our show every Friday at 9:30 Pacific. And thank you. Please also tell us about some questions you would like to ask John. We would love to ask him. I know Beau is going to ask some questions. I will ask some questions. We would like it to be very meaningful, that you can really enjoy this show and learn from it, because that's what we talk about real estate, about loans, about life, about personal development in this show every week. Thank you. Beau?
Yeah. So I think what we should get into is we'll kind of talk about John's recent deal, and also what a big factor is that you might not, whoever you are right now or wherever you are right now, you might not have the money, but as long as you have the intellectual capital to put people together, you can parlay yourself into these deals, right? So John's going to probably talk to us about how he found the deal, putting the investors together, getting a piece of the action, and you can do this over and over again with sometimes none of your own money, right? So that's the advantage. It's once you get the education on how this all works, it just starts flowing. And it's not really about what's in your bank account. It's about your connections with your investors and people that are looking to do deals and to bring solid deals. And I think also what's interesting about this deal is that you're going to see these type of deals, which are what I'll call the mom and pop owned deals, anywhere from 10 to 40 units, typically are owned by people that aren't really proactive in the management. And that's right now with COVID is creating a huge opportunity for newer investors to get a piece of these 20, 30, 40 unit buildings with little money down, because there's lots of financing for multifamily right now. So let's kind of dive into that and kind of like how you found the deal and kind of your expectations with the deal. And
that'll
also
be exciting. That'll be very exciting. Beau, I just saw one question just came from Derek. Thank you, Derek, buddy. John, how do you keep it all together and stay on top of it all? Are there any tools you use? and you're running so many different parts of a business all at once? Good question. Very good question. And then we can dig into your deal, John. I'm very excited about that, buddy. Yeah.
Absolutely. So Derek, there are a lot of moving pieces, and one thing that really has helped me is kind of block my calendar off to kind of say, look, from 9 a.m. to 10 a.m. I'm doing this. Really structuring my day and my time to kind of time block. Because before I'd find myself, it's easy to get caught in the phone, doing things like that. So if I block it off and say, look, for this hour, I'm going to work on this, for that hour, and then creating to-do lists. So I like checking the things off. It's satisfying. There are many things. So we use Asana, Trello. I like Asana and Trello. So Trello is really easy. We use it with our VAs. So you can create a task, assign it to someone just like Asana, but move it across your boards. And then a lot of sticky notes. So Vinny has a lot of ideas. So I'll write them down, put it on the wall there, and then I can remove the sticky note when I'm done. So it's kind of an antiquated way. And then I have a couple whiteboards. So there's some over this way that I can, visually see. So, out of sight, out of mind. So that way it's always in my sight, and I look directly at my big one so I can see, everything. So very, very simple, because I like to keep things as simple as possible. And there are a lot of, many apps and things out there, but the simpler, the better. The less things I have to check on my phone. I like that as well, because 10 years ago, a lot of this stuff didn't exist and people were very, very successful. And now I think people get too caught up in technology, and there's no, like I said, there's no simplest form, or there's no like crazy formula to success. It's just doing it. So
sure. No, thank you, John. That's very well done. There's another question Mace is asking. Hi Mace, nice to have you. Thank you for being. Where are you from? Please tell us that too. How do you get your leads and investors? That's a good point. Very good question, Mace. Yeah.
So with, number one, so a lot of, what I've learned is a lot of people want to be in real estate. A lot of people want to be rich. A lot of people want the cash flow, but they don't take the actions and the steps to do it. So, if you asked everyone if they want to be rich, they'd say yes. But if you showed them the work that it took to be there, most people would say no, or they wouldn't do it. So what I found is you have to build the knowledge and the education. The confidence will come to talk to investors, and, doing this deal, there's many plates, like Vinny would say. So you have to master them all. Or you don't necessarily have to master them. You have to know them and be, proficient in them. So, for example, you can't get investors, or it's hard to get investors without a deal. You have to be ultra confident. And so, it's kind of like the chicken before the egg. So what I've learned, start small. And now with Vinny, so where we get investors, so we have a great virtual assistant team in India that is doing really good with ads, different click funnels, things like that. And having Vinny's track record, it's really easy. And there's SEO, so when people search passive income, multifamily syndication, so that way as well. But for someone that's just starting out, you have to start small. You have to start with your circle, people that know, like, and trust you, because if you just reach out to someone, let's say on LinkedIn, because you can't really meet in person now, it's much harder to break down that barrier. So, start with family, friends, get a couple deals, a deal or two under your plate. And it's really not that hard. We can discuss further on the deal that we just took down, and you'll see that it's not rocket science. It's not hard. There are a lot of moving plates, but there are a lot of moving parts. But as long as you have people around you that know what they're doing, that can give you the confidence, can steer your ship to show you, if you're doing it right or wrong, you'll be fine. And by doing that, it'll build the confidence in other people. And that's how you'll eventually grow.
Awesome. No, thank you. John, I'll let you go into and sharing with us the deal. I was so proud of, a lot of people, they just want to learn and learn, but not really take that step to put into and, crush it and get into that LOI stage, letter of intent, and talking to the brokers. And, the biggest thing I have learned in my life is about 14, 16 years back, I didn't know anything. I didn't know about COC, cash on cash, or our LOI, letter of intent. My very good friend, he showed me in a restaurant on a napkin. When LOI means you give the terms, he wrote down 4 or 5 points. I brought that napkin home. I said, holy cow, I don't even know how to do an LOI. So I did the research and it's just that you want to be a sponge and you want to learn. The education is a big part. Go ahead, John. But so I know you're very proud of the deal, and thank you to Beau. He was able to finance the deal. So both of you are there. So take it away. Yeah.
Yeah, absolutely. So, it wouldn't be possible without Vinny, and, surrounding yourself with the people that give you the knowledge and to learn. And I mean, you can read as many books, but until you actually take action and do it. So, a lot of people, like you mentioned, Vinny, they want to do it, or they get stuck in analysis or paralysis of analysis. And, there's different things. So, you can learn your whole life, but if you never take action. So, I was at a point where I felt confident enough in my abilities to go forward. So, partnered with actually Brian LeBrack and my father. And so we were talking to many brokers, underwriting deal after deal after deal. I've driven to, probably 10 or 20 deals that were viable out of the ones that we liked. And, a lot of them were especially today, a lot of them are overpriced. A lot of people are overpaying for assets. And so this deal actually was under contract prior for a little bit higher than we got under contract. It fell out. The buyer originally wanted to buy in Knoxville, but then he actually got a bunch of his LOIs accepted, and he got more in North Carolina or Charlotte, I think, where he was from. So he dropped out of Knoxville and is only buying there. So, but it was through the relationships with the brokers, and something that Vinny taught us is that when you don't want to waste anybody's time. So you have to be at the point where you're confident to reach out to brokers. So one thing that, really stuck with me is that when you reach out to a broker, you have to get back to them, 24, 48 hours and give them feedback. And you don't reach out to a broker until you're absolutely ready, until you're serious. So, if I call a broker and say, hey, look, I want to buy a multifamily, but I really don't have the money, I don't have the education, and you just waste their time, they're not going to call you back. You're going to build a bad reputation. So we were at the point where we had the time, the money, the knowledge to be able to get back to them quickly, to submit LOIs, to get it done. So, through a lot of hard work, diving through deals, underwriting, we found it. It's a 20-unit deal in North Knoxville. So it's a gentrifying area. It was originally on the market for $1.6 million. We got it under contract for $1.275 million. We really like this deal for the location because it's only 9 minutes from downtown, 10 minutes from UT, and then 14 minutes to the airport. And North Knoxville, if you look at Knoxville, so I truly don't believe there's any horrific parts of Knoxville, but it's more of a lower economic area. But it's on it's going up. And so a lot of positive markers that we liked is there are a lot of wholesalers, flippers, specifically on the streets surrounding that are buying, rehabbing, flipping, turning over and buying them for, $100,000, selling them for $300,000. So it was a good sign. The city is actually investing, I think, about $1 million on our street to build sidewalks, to build a roundabout, to do landscaping. Very, very good. And the crime is slowly moving north, it's dispersing. So it's, something that, very important to buy in the area. And then the actual deal. So most of the rents were about $200 below market rent. And so 50% of them were renovated. The roof was redone in 2019. The parking lot was 2018. So a lot of the major CapEx was already taken care of. So, when you look to buy an apartment, you want to look at the major things that are going to cost you down the road. Yeah.
Wow. That's amazing. So you just found and again, I think we should definitely tell everybody that, it's not that you stuck gold or diamond on the first try. You got to really go through several assets, just like I'm sure John also went. And also the big thing I learned, John, is saying that you took the step, and you did the learning of the education and how to speak to the brokers and making sure we are not wasting their time, you mentioned. And that's so true, because a lot of time people just say, let me just do LOI, let me do this, let me do that. A lot of coaches teach that. And that's worst thing one can do, literally, because unless you are prepared and you have the money, just like you said, your goal should be you're going to close on the deal. Do you have the investors? Do you have the financing? Do you have all those things? And now you are ready to crush it and close. So tell us more about it. You want to share some things about?
Flyer. I'll share some pictures here. Let me share my screen. So the deal, great deal here. I think I have to allow it. 1 second.
Oh my gosh. Mace is from Philippines, by the way, and working for someone in Livermore, California. Hey, thank you, Mace. Actually, Mace, I live in Danville, Blackhawk Country Club, not too far from Livermore. So you're very close by. Yeah, go ahead, please. Uh-huh.
So I'll share this. So if I pull it up, let me show this one. So if I can make it any bigger, can you see it all right or no?
Yeah, we sure can. Yeah.
So
So the picture,
property-
you can make it bigger, maybe. The flyer. Yeah.
Let me go back one more.
Oh, awesome. Uh-huh.
So you can see one thing
Yeah.
we really liked about this is that it's one roof. So there are a lot of duplexes that they sell as 20 units, but it's 10 buildings, 10 roofs. So one roof, great bones, all brick. The exterior, no major issues. The new roof, the new parking lot, and the biggest thing was the rents were on average $200 below. And so this was a story, like Vinny said, that it was very poor managed. The management team, was pretty much non-existent. They would allow, not the best tenants to move in. And so immediately what we're doing, we have a really great property management company, DK Management, that, very large company, but they're very, very good. We're initially going in to rebrand it. We've changed the name to Bell Morris Terrace Apartments to kind of give it a better feel. So, the area is a great area, nothing wrong with it, but to rebrand it, to give it a better image, which is good. And then, like I said, the location is awesome. Gentrifying area close to downtown. So that the tenant or the resident base that we're going to get is much, higher than if we were a little bit more north, because it's further from downtown, further from the airport and whatnot. And so some of the loan, actually, Beau was able, I'm very blessed to know Beau as well. And so we were able to get a very, very attractive loan. So 80% loan to cost. Actually, so 3.5, we ended up going with 10-year term. And then it's actually 25 years amortized. And so we're, our projected hold time, we're going to try to get rid of it 5 to 7 years. So initially what we're doing is we're going to renovate the remaining units. So 10 out of the 20 were renovated, but, the definition of renovation is, very discretionary. So their renovations were, flooring, maybe redo the cabinets or just resurface them, maybe a new appliance. So great, but not to our standards. So what we're doing in all of them is we're going to add a dishwasher. So you can, more amenities, we can get a higher rent. We're adding a little bit nicer paints. We're doing, nicer fixtures in the bathrooms, because the resident that we want to attract, and these items aren't necessarily big ticket items, but it's going to have a good ROI on what we want to do to achieve, so we're thinking the next 3 to 5 years. So without the comparables in the market, they have dishwashers and they're getting, 900 plus. Most of our rents are between 600 and 700 right now. And so by doing this, we're setting ourselves up for the long term to be able to achieve the higher rent. So, very, very good. And then, some of our game plan. So there's just 3 partners in this, myself, my father, and Brian Lebrecht. And so what we're doing, instead of taking cash flow year one, we're completely reinvesting the money back into the property. So we know that, putting it back in. So instead of coming out of pocket for the repairs, it's going to have a huge ROI on the property. So, we're looking to add, 500 to 700,000 on the back end. That's pretty conservative based on, comparables in the market, where the Knoxville market's going. So, we're excited.
Excellent. Oh my gosh. I mean, John, thank you again for going over the whole thing. I would love both you to tell us, buddy, as you looked at, the property and the package and all that, how did you get the good loan? I mean, you got a great loan for John.
Well, so first you got to start with the sponsors. Who's in the sponsorship team? What's their experience level with multifamily? Then you're kind of you're probing it to see does it make sense to go small balance agency? Does it not make sense to go small balance agency? What's the exit strategy? So like if you go agency debt, you're stuck with a 5-year prepayment penalty, and they might want to refi in year 3, or maybe they don't. So what we do is we package up the loan request and we take it out. And I knew the best fit was going to be a local community bank or credit union. Then it comes down to identifying, so basically I put together a pre-package. I send it out to the 3 or 4 lenders after having an initial conversation. And then I wait for feedback. And, actually most banks on this deal would have been in the 4.5% range. We were able to identify a credit union partner that was able to give us, a point better on rate. And not to mention, there's no prepayment penalty. So this is huge for these mom and pop properties. Even if you may want to go into agency, you're getting almost a better deal on these credit union deals. And they're overlooked. They're overlooked by a lot of multifamily investors because everybody talks about Fannie and Freddie. Well, if you're buying properties, from $1 million to $15 million, there's tons of credit unions with lots of money. And they like to invest in their communities. So the good thing was John lives in Knoxville, so we found a local credit union that did the deal with phenomenal terms. The downside to credit unions is they don't typically offer interest only periods. But this prop, and the other thing too is that when John bought the property, the occupancy level wasn't 90%, so it wouldn't have been a good fit for agency debt, because agency debt wants to look for a trailing 3-month P&L with 90% or greater occupancy.
Sure.
So we quickly assess this. Basically, that's what I do day in, day out, and figure out, okay, sponsorship, property. Okay, now we have an idea where the deal is going to go, and then we figure out and get people the best terms. That's just how it works. And what I do day in, day out is talk to people, TTP, talk to people, right? Reaching out to banks, reaching out to credit unions, and finding out what they do. So, I mean, that's pretty much it. I mean, any type of deal can be financed. It's just, you got to figure out how to be creative about it. And then what's the best solution, and what's the exit of what's the exit strategy? Then we determine what the best loan is.
Love it, love it, love it. Hey, Brian, nice to have you, Brian Martinez. So raise capital first. He's making a great comment, or get commitment from investors. Aha. What would you say, John?
What you want to do is, it's spinning the plate. So you can't, it's very, very hard if you're not, a big name like Vinny, to get to raise money before you have the deal. So you have to do it simultaneously. So you have to be talking to people, say, here's what I'm doing, here's the type of assets I'm looking for, and kind of get them warm to the idea. And then, you always want to have more people that are warm to the idea than you think, because it's harder to raise capital than most people think. And most people think they can raise more than what they can. So, if you're talking to 10 people, you want to make it 50. That you're raising for a big deal. And so as you're finding the deal, so, if you have a good deal, most of the time you'll be able to find the money, but you have to do it while you're finding the deal. So it's spinning all the plates, like Vinny says in this book.
And also, I want to add on this kind of stuff. These smaller deals, like if you haven't done your first syndication, these smaller deals aren't syndications, right? Like really what you might want to do in the beginning is do a joint venture. So people that you're networking with, that it's not a syndication, and this wasn't a syndication, it was just a joint venture deal. It's a partnership. So as your network, and the good thing about John is he's obviously involved in the educational department for Vinny, but what does he do all day? He networks with people, right? And that's what we should all be doing as investors, is meeting people, because not everything's going to be a syndication to start. And these smaller deals, sub $3 million can be easily done with a joint venture. So that's just finding people. So the way it works is, there could be John's father and Brian who have money. There could be John, who's the guy on the boots on the ground that's doing more of the finding the deals and kind of managing the problems because he's local. And so that's where John's value comes in. So you can carve out your niche. When I started flipping houses, for example, I had no money. So I found a contractor and a money partner, and we partnered 3 ways, and we were able to buy lots of properties with none of my own money. So figure out what skills you have, and then work backwards. And then obviously, if you're finding the deals, you're in control. You tie that deal up, and you can bring in a JV partner. You can assign the contract. Lots of stuff you can do.
So true. So true. No, thank you. That's so wonderful. Let's just kind of talk about what else comes to your mind now. I think one thing that I picked up, John, is that as you were underwriting it, you were also laying out the plan, the business plan. And I saw in your flyer lots of great, ideas and things that you had thought through. So that's one thing, we always look at, is how to really buy the stuff or property or asset now, and what will be the exit strategy, right? I think we have another question here. Let's just see who can, right there, hopefully to meet you, Vin. Oh, after this pandemic, thanks for the info, Beau. Hey, all right, Beau. Great. How long is the approval of the loan? Aha. And I agree, finding people continuously. Uh-huh. Beau, question for you, bud.
Yeah. So the other thing, working with these smaller credit unions too, there's a lot more flexibility. It's different. It's not as rigid.
Uh-huh.
Fannie Mae and Freddie Mac have certain guidelines. If you don't fit in, there's a little bit of kind of discretion on their loan terms, and if it's in a certain markets, you can get a little bit away with their different thresholds. What I like about local community banks and credit unions is that we're able to kind of negotiate and work with them, and we can be more flexible. So they don't have a stringent lock-in period. They quote you, and they usually it's not like a 60-day lock. They'll what they quote is what they really, what the advantage of credit unions and small local banks and so forth is that they're supporting the local economy, right? And that's kind of where I'm kind of growing my niche to be, is that I realized there was such a lack of knowledge with all these local lenders, because if you look around, there's 14,000 community banks and credit unions out there, probably even more. So there's no way John's going to know where to go initially. So that's where I come into play, is that we build a directory of all these resources all over. So if somebody calls me in Augusta, Georgia, or wherever, I have some resources there, and I'm constantly building that, because that's what we have to do, because I want to provide the best value I can to John and his sponsorship team, right? Because at the end of the day, financing is a huge part of it, because usually 70 to 85% of it's going to be financed, right?
Yeah.
So that's the real critical part. And getting an extra point better on the interest rate, or getting no prepayment penalty, are huge caveats, especially thinking with the exit strategy. Where John originally was saying, we might refinance in 3 years, right? That's going to give them the flexibility where he can. If they implement their value add strategy, and let's just say 3 years from now they get NOI up, whatever, 50, 70, $100,000 a year, what is that going to do to the value? And let's kind of dive into your projections on that, John.
Yeah, absolutely. So, you always want to look at the future value of what you're buying. So whether it's, something small, so I like to collect guns. So like what's the value? So you don't want to buy something that's going to go down, that's going to hurt your net worth. So it's very important to look at that. So especially with real estate. So what we looked at a ton of deals. A lot of them were great cash flowing assets, but most of them, the future value, the area wasn't, maybe wasn't on the upswing, or, there's a lot of issues with that. So we like this property because it's in a gentrifying area. We know the city's investing money. Other investors are spending a lot of money there. And so with that, getting the rents to where we want, getting the improvements, doing all the value add. I mean, we're looking minimum 500,000 to 700,000 on the back end, and we're hoping to achieve that within 3 to 5 years, which conservative time. So we may be able to do that in about 2 years. So we could refinance, take the equity, roll into another deal, sell it, or refinance, get all of our money out, keep it, because it'll cash flow, 50 to 60 grand a year, which is not anything to retire off of, but you get enough of these assets, you're not really doing much. And when you have a great property management team, it makes it, less stress, and you're able to sleep well at night.
Sure. Also, John, there was a question, like how was the partnership? See, joint partnership, you could do it many different ways. It depends on how much money is brought in. Somebody who could be very active, very passive, somebody who can bring a lot of sweat equity, into the deal, and demand, larger percentage of the ownership. So all those are very much, when your partners are getting together, you all look at what you're bringing to the table, and then you are able to decide, okay, you know what, we'll be all on the loan, or two of us will be on the loan, all those things like that. Also, there was a great question. I was just going to say, John, that was right here by our friend. Again, I'm really excited, guys. Everybody who is really chiming in, we have had a great interaction today, and I appreciate that. Everybody, please remember to come back on next Friday. Also, by the way, we do one more show. I wanted to bring in a little plug. Vinny is always selling. Look at this one. Our new book is coming out, Senior Living Investing Made Easy. John, myself, and Shahid. And we do a show every 2 weeks. We do one on Thursday at 9 o'clock. 9 o'clock. Thursday, we did it yesterday. And then 2 weeks later, we'll do it again. So first part of the month, then the middle part of the month on Senior Investing Show. So that's this one. And of course, if some of you would like to watch us and so forth, my other shows, which is my podcast and all these things, and the 2 books also on Amazon, which are the top sellers. So you may like to, pick them up right there. It's in Spanish also, by the way. We wrote it in Spanish, which is great. And then also over here, that's profitability. Positivity brings profitability. So there are some good books out there. And again, watch us. And, Beau puts together some great content out there. Beau, go ahead and toot your horn, bud. A little bit. Yeah.
Yeah. Go into YouTube or go to investorfinancingpodcast.com. And I talk more about the financing and break down different topics within financing. We talk about SBA financing and so forth. And right now I'm working on a lot of different loans. Some people buying franchises. So I'm doing some SBA deals and construction deals and multifamily deals and small multifamily deals. I got people buying property in Florida. I got a guy buying a 8 or 9 unit property in Florida for awesome. 600 or 550 grand. And those are almost impossible to finance because nobody wants to do the small.
Yeah, exactly.
So we found a community, a credit union in Florida that's financing it. But the loan officer at the credit union, it's interesting. She said that Florida is so busy right now because the rates are so low that everybody is backlogged like months right now for refinances and purchases. So, the expectation is things are taking a lot longer. People just just appraisers are backlogged. We got COVID still spiking. So be patient. Rates should stay low, but just when you're planning, just think that everything's going to take a little bit longer because literally that's what's happening right now. And especially in markets where people are moving, Texas and Florida and Nevada and Arizona, things are, and obviously the residential refinance boom. I was just talking to my residential broker friend, and he said conventional conforming loans on single family homes owner occupied, you can lock in rates on a 15-year term at 1.99 right now.
Oh my gosh. Look at that.
It's crazy. It's crazy. So, if you're, I'm talking to a lot of people right now that have like a ton of equity in a bunch of properties. So it's not a bad idea to do some cash out refinances and lock in this low 30-year fixed pricing. Have some of that dry powder on the, out there for you. So you're able to jump on any opportunities that present themselves, which is there's opportunities happening right now. And so like John found this opportunity that had a tremendous upside, and it's about persistence. He was looking, property went under contract with somebody else, fell back out, opportunity presented itself again. He was in the position to quickly write an LOI, get proof of funds or whatever he needed to do to make that deal a reality. And that's what we have to do, right? So you got to practice a lot before you're ready to strike. I think what John was doing, right? He was practicing just like what he would do. Were you a shot put person? Shot put?
Yeah, I did all the throwing events, shot.
Yeah. So he would practice every day, right? And that's what we have to do in real estate. He goes out and practices. He's looking at deals.
Yeah.
And then at some point, the competition is going to be one of these days, and that's when you actually find a deal that's viable. And then all that practice pays off, right? You've listened to podcasts, you've gone through some of Vinny's training, you understand how to underwrite these deals, and then you're able to just tie the property up and then do your due diligence. And it's a checklist, right? You got to go through your checklist items, and that's what John did. And then he.
For sure. John, how can people write to you or meet you or contact you, bud? Yeah.
Yeah, you could email me directly at john@vinnychopra.com, VINNEYCHOPRA.com. That'd be the best way. Reach out to me on Facebook. You can add me on Facebook, Instagram, send me a message, open door, any questions you guys have.
Sure. LinkedIn also, right?
LinkedIn as well. Yes, LinkedIn. We're streaming live on LinkedIn. So, feel free to reach out. Happy to answer any questions and be of value to anybody.
Beautiful. There are a few more questions. Let's take Tim. Tim Yuslov. Nice to have you, Tim. Thanks for joining. Really appreciate that. What creative ways would you recommend during these times to raise capital? A lot of people feel scared especially the new investors that are just testing the waters, right? Testing the waters of real estate.
So I would say relationships are more important than ever now. So building the comfort with people. So, we have a lot of new investors that have recently invested with us that it's their first time. And a lot of them, they're very scared. So I get calls, texts, and emails from them every week asking for updates. And, when they give you 50, 100 grand, whatever it is, it's their hard-earned money. And so a lot of them, they're not sleeping well at night initially. So, just building the relationship with people that you relate with, finding your avatar, and really showing them that you care and that you have their best interests and you're not going to lose their money. And Vinny has a great story where I think your first investor, you gave the money back, and because you were worried. And so it's just building that trust and finding and showing the investor that you're there, you have the confidence and the ability to do what you said.
No, I agree, John. And I would really hope that people who are watching us, viewing us, and a lot of people watch later on also, please reach out to John at vinnychopra.com and directly, and then you will love it because we'll let you come into the mastermind inner circle sessions. You could kind of feel and touch and see how many people all over the USA, even abroad, people are joining us now in the mastermind, and they are learning so much great principles, how to underwrite the deal, how to look for emerging markets, how to say what to say, look at the deals, because you'll feel comfortable if you have some deal going on and you want to get some opinion on it. Reach out to John. We'll let you come in without even joining the academy. We'll look into it and dissect. And the key thing is you want to know what you are doing. And we have so many tools, right, John? Oh my gosh, we give all the PowerPoints, all the PDFs, all the different tools and systems we have developed over the last 12 years. We give it to all our investors who joined the program and things like that. We have online course also, over 1,000 lectures. Hold on. 1,000 lectures, and we are revamping lots of great materials where you could just crush it in this business of commercial investing, not even talk to us. You could go through chapter after chapter after chapter, and then you'll be able to just, crush it. So, no, thank you. Thank you, Mace. And let's see, who else is here? Again, John at vinnychopra.com right there. John, thank you for your time, brother. It was wonderful. And I just want to say how much it's been, great that a lot of people have joined. Please do give some, thumbs up and hearts and likes and subscribe to us. Also share this episode as you are watching it. If other people can really learn and who are thinking about investing in real estate, this is the show to come to. And we would love to bring, if other guests, if you know of some other great specialist guests, just reach out to John and Beau or myself, and we'll get them on the show, because this show is for all of you. And thank you, everybody who joined together today. It's almost 50 minutes. Beau, any last comments, bud?
Yeah. No. Thanks, John, for joining us. You're always in the back doing all the heavy lifting, but it's good to have you on this side of the screen.
Totally.
And it's good to share your success. The start of many more multifamily properties that are going to pay you day in and day out and create wealth for you and your future wife.
Yes. And I'm really excited that John is also my partner now in the senior living investing, which is exciting. And it's going to be, like almost, like $250,000. I'm really projecting $250,000 over 3 years on every project. So it's a huge, excitement, which I feel so proud that, John will be able to build his net worth and, doing some great things for lots of people who he'll come in touch with and so on. So, hey guys, thank you so much for today. I hope you like the show. Remember to like us, subscribe to us, gives us thumbs up, hearts. You can do it even while you are watching, by the way. I just found out you can even do it while you are even watching later on in the show. Please share this with other members of your, team and other people like that. Thank you again. Any last comments? We had a lot of people join from all over the world, seems like today. That's great. Huh?
Yeah. We got to get more of these success stories on here. People like to hear from the people that are, because John's a normal guy, right? And just took action and, just closed a nice deal, and that's going to put money in his pocket. So I'd love to get more and more people. And I'd also love to get some brokers in different markets that we can interview about what's going on in these markets. That's kind of my goal for the show too, is any brokers listening, we want to pick your brain about different sub-markets and markets all over the U.S. so we can, dive in and find out what's going on in these different markets.
Totally. Thank you, Michael. We're going to wrap up by thanking everybody who joined us. We'll see you next week, next Friday. Have fun. Enjoy the week and the weekend. God bless you all.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.